There was a huge amount of data about the economy today, so fasten your seatbelts. And none of it was any good, by the way. Let's start with retail sales, down a surprisingly large 0.8% in July, after rising 1.2% in June. Department store sales slumped by a pretty amazing 10%, the biggest fall in 7 years. Here's how it looks on a chart. The total is returning to trend after the lift due to the carbon tax compensation, but look at that drop for department stores. The performance of manufacturing index jumped 5 points, but it's still well below 50, which is the level that separates contraction from expansion. So it's still contracting. Job advertisements are still falling. They're down 2.3% in August and 9.6% compared with this time last year. Company profits fell 0.7% in the June quarter, according to the ABS. Even inflation doesn't look too good. It kicked up 0.6% in August, according to the private TD Securities gauge. And finally, house prices were flat in August, which means they're still down 2.4% for the year. Here's a chart of the main capital cities. Now, the headlines are that Darwin is the only city seeing rising prices. In Sydney, prices are almost flat, but not quite. And in Melbourne, Brisbane and Perth, they're falling. And yes, I'm sorry I couldn't get Hobart into the chart. The share market closed about 1/3% higher, following on from a positive session on Wall Street after the Federal Reserve Chairman Ben Bernanke said he might print some more money. In Asia today, the Shanghai market is up, but Tokyo went down, and the Australian dollar continues to deflate slowly with the Chinese economy, about which there was some more data today as well. The manufacturing index, it is, down again, indicating slightly faster contraction. And that's finance.